You can see here the market was just way overdone, to the downside on the daily chart, right? I mean, the market had moved 160 points or so in a matter of less than 2 weeks into, this pretty major area of support down here. And now we're getting, retracement from that larger time frame support. Now, the bigger swing is still technically bearish over here, on this daily chart. And, you can see that so far, all we've done is put in like a 38% retracement, right? So the bigger pattern is still bearish on the daily. The intermediate or the short term, has been for us supporting the upside since yesterday, actually even since the night before, right? So for the 13th, if you watch, if you remember on the EminiPlayer site, and you watch the end of the recap video from the 13th, in that video I talk about how, there's some larger time frame support at 2790 to 2800. The market's really overextended and very likely to attract buyers, and the risk reward just doesn't favor the sell side down there. Like what's the reward to risk for someone shorting down here? It sucks. So we've been talking about that since Monday evening, and that hypothesis played out pretty well. Now, on the upside, even though things are looking bullish short term, as the market starts popping back up into better areas of resistance and, back into like, 50% retracement or 61.8, if it's really strong, then those are still spots where sellers can be active. So as the market pops back up, as it approaches better areas of resistance, those can still attract sellers. And, the question would be now, do we just kind of balance back and forth? If you go back and you watch the end of the coaching webinar from last week, in that webinar, I talked about how, if this area gets taken out, I think it was a 2860 area that I was talking about. If it gets taken out, then, the market can dip into this balance and buyers can step in, and then we can kind of merge these balance areas together, right? So you're breaking from one into another, buyers step in, and then we kind of merge and become one big balance area. So that idea from last week is kind of what played out over the next several days. We got this breakdown into this balance area, and then the first time down, we got a nice pop, right? And then we went down, tested the bottom edge of it, found buyers. Now we're popping again. Now as we go back up, we're going to start running into resistance where, things can get a little bit messy for the buyers. And then maybe we go back and forth. Again, I don't want to over predict it. As a day trader, you want to take it day by day. But the bigger pattern now looks to be that of, this directional move, now getting a retracement off of a deeply oversold condition, and now we could pop up, into a 50% retracement, maybe a 61.8. This would be considered larger time frame resistance, 28.95 up to 29.01. If we look at the zones chart, you can see 87 to 90, 93, this area up here, that would be larger time frame resistance where, sellers can be active. Like this could be a big hurdle for the market. This 28.95 to 29.01, this whole area could be a big hurdle for the market. So I think that, as you push higher, you increase the odds of sellers starting to become more active. Just like the risk reward didn't really favor the sell side down here, I think that as you push higher, the risk reward and the expectancy becomes questionable at the very minimum for anyone initiating a new long from these higher prices. So anyone buying from these higher prices would be at risk. Those would be the weak hands. Now, anyone who bought down here is sitting on nice profit, so they're not going to be trapped or, scared. But anyone buying and chasing the market as it goes higher is going to be at risk. So, for now, our intermediate term bias will continue to be neutral. Our bigger picture, like today, the bigger picture was neutral bearish. That's taking the big downswing into account. So here's, the trader worksheet from today. So you can see that, today we have short term is neutral, right? So despite the selling that we saw in the overnight session, which I think probably led a lot of people to get overly bearish, right? A lot of people probably saw the sell-off in the overnight session and got very bearish heading into the open. And that actually kind of creates the conditions for the wide range bar. So, Will was asking earlier, what's the catalyst? I mean, the catalyst could simply be the market got too short and the bias or sentiment, for a lot of people was bearish heading into the open, and that was the wrong bias, right? Our bias heading into the open was neutral, right? Yesterday was neutral bullish. Today, despite the sell-off in the overnight session, the bias was neutral, and the idea was that, we're going to see if initial support can hold 1575 to 1875, and we have to be open to the market moving in either direction. Like, we can't be overly bearish, right? And today's RTH low was 1575, right? So initial support held to the tick in the RTH session, and in Globex it was taken out by 3 ticks. So, with this market the way it's setting up right now, with these balance areas merging together, I think that, that's the type of environment we're going to be in, where if the market overshoots to the upside into, larger time frame resistance, that's going to provide nice shorting opportunities. Anytime, maybe the market pulls back into support, that can be a good long opportunity. So, when the bias is neutral, it means that there can be edge on both sides, but you just need to be more careful at zones that are not really very significant. Minor areas, and I'm not talking aggressive areas, there's a difference. Minor areas of support resistance are probably not going to provide as much edge, or if they do provide edge, it's going to have to be assessed in real time. And the real time situation starts to gain more importance when the short term and intermediate are neutral, right? When the short term and intermediate are not favoring one particular side, then the intraday becomes more important. And you just need to pay very close attention to how the real time situation is developing. What's the intraday bias looking like? And then you give more weight to that, because the other time frames aren't really in play, or they're not exerting any big influence at the time. So that's kind of what we're in right now. It's not super simple at the moment, and I think we just have to be a little more careful with zone fades, because the market's coming off of larger time frame support. It's rallying back up, and we don't know exactly where the failure point's going to be for this bounce. It could be a 38% retracement, it could be a 50, 61.8. It might extend, all the way up to even these areas before we get any decent selling. It could happen earlier. Like, it's difficult to say. Right now I think it's not really that simple of a call. But as it pops back up into, better areas of resistance, I think sellers can step in. So we just don't want to get caught up in the short-term bullishness or the short-term bearishness that we might see on like a 5-minute chart. So have that bigger picture perspective, be aware of the more significant zones. If there's a lot of momentum in one direction, then don't fade early. Wait for the market to get overextended if you're going to take a zone fade. And this is a high volume, high volatility, high momentum market. So you have to be very in tune with the real-time intraday momentum situation. But that's the environment we're in. And then, if you are trading the E-mini S&P, then follow along, on the EminiPlayer site. I think it's going to be the best value that you get. For $97, you're getting daily analysis that's prepping you for the day. It's keeping you out of bad trades. It's helping you get into good trades. It's keeping you in sync with the market context. And, so I think if you're trading the E-mini S&P or the micro E-mini S&P, the best thing you can do is follow along. See how the daily analysis is shaping up. See how we're adjusting our bias day to day. I can guarantee you a lot of people were caught on the wrong side today. That's usually when you get these, big movements, is one side gets caught. All right, so you look at this much of the chart, and it's very easy to think, oh, it's just going to keep on going. So the market gets caught on the wrong side if you don't have the right perspective, the right bias. But if you have the right bias, then when you see this, you're like, no, I'm definitely focusing on the long side, and I'm going to be careful on going against this big momentum. And then you can profit from it, right? So it's just about having the right view. As long as you have the right view, then, it's not challenging, and this is actually a very good environment to trade in. There's so much opportunity. But, it's high volatility. You really have to be on top of your game and be pretty sharp, not miss anything to really capture these opportunities. Because if you're not, then it's quite easy to get run over as well, right? All right, guys, that is a wrap for today. Thank you for the questions. Hope you guys are all trading well. Enjoy the rest of your day. Have a great weekend, and we'll talk same time next Wednesday. Good night.